Welcome to this part 2 video in a video series I'm doing all about the coronavirus and how it will impact the real estate market, where the opportunities are, and if you're a real estate investor, especially a wholesaler and a flipper, what you should do to adjust as well as what I'm doing in my business. On this video, I'm going to specifically focus on why now, amongst all of the chaos, may actually be the perfect opportunity to not just make money in real estate, but make big money in real estate. Right now, as the real estate market may be shifting, if you've been waiting or wanting to make this year your best year yet, be sure to watch this video where I'm going to discuss why 2020 is the time to get into real estate coming up.
This video is brought to you by FLIPSTER, the nation's #1 real estate software, with tools for finding, funding, and flipping houses. Check it out now at getflipster.com.
If you're new here to this channel, I'm Jerry Norton with FlippingMastery.com, and this channel is all about ways to help you make money wholesaling and flipping real estate so you can live your dream life. Be sure to subscribe and click the bell icon to get notified when new videos are released. I believe a possible downturn in the real estate market in 2020 is going to present some unprecedented opportunities for you as a wholesaler or a flipper. But you have to get into the game and you have to know how to adjust for the new market we may be coming into. This video is for you if you've been on the fence about getting started, or if you're currently in the game and now you're thinking that you should sit and wait on the sidelines. As for me, I plan to close even more deals. Like I said in the part 1 video, no one knows yet the impact the coronavirus epidemic is going to have on the real estate market. I'm planning on doing several videos about coronavirus and wholesaling and flipping real estate and how to adjust and navigate through all of this. I've created a playlist where I'm going to put all of those videos. You can find that link in the description. At this point, it's all speculation until we see how it unfolds over time, but I'm seeing a lot of people speculating that the coronavirus pandemic is going to be the cause of the same real estate market crash of 2008. Now, while there very well may be a market decline and maybe even a crash, if it does, it won't be for the same reason as 2008. The housing industry, and more particularly the lending industry, was the cause of the 2008 recession. Remember, real estate crashed first, then the economy followed. Now take a look at how high the mortgage credit availability index was when the crash happened compared to today. Now I remember those days when you could get a 100% loan with no verification and no documentation. If you could fog a mirror, you could get a loan. Since it was so easy to get credit, inventory exploded, and look at this comparison from 2007 to today. Now, on top of excessive inventory, people were over-leveraged and buying homes they couldn't afford at 25.4% of their income going to housing compared to 15.5% in 2020. Now, today people have equity in their homes. Even with massive job losses coming, people can sell their homes and pay off their loans and reclaim their equity rather than defaulting and causing a huge influx of foreclosures. And like I talked about in the part 1 video, today, unlike in 2008, there is a shortage of inventory. Bottom line is this: we are not in a housing bubble like 2008, so if the real estate values do decline, it won't be like 2008, and if so, exactly how bad and for how long is the real unknown. But here's the thing that I keep coming back to. As a full-time wholesaler and a flipper for 16 years now, and having personally gone through a real estate market crash in 2008 and a rebound, and having been doing deals in a booming market for the past 6 or 7 years, this is what I want to tell you. Real estate investing, and especially wholesaling and flipping, works in any market. Wholesaling is wholesaling and flipping is flipping, regardless of what the real estate market is doing. Our business model is buying and selling real estate and people. As long as we have people, and as long as we have people living in houses, wholesaling and flipping is going to continue and will always be a viable opportunity to make money. In 2008 through 2010, when the market tanked, I still wholesaled and flipped houses. There were still investors to wholesale deals to, and there were still homeowners that wanted to buy fixed up homes. The what doesn't change, wholesaling and flipping houses. What does change is the how. How do we wholesale and flip houses when the market shifts from up to down? The reality is, if we shift to a declining market, some things are going to be harder about the business for sure, but some things are going to get easier. Let me illustrate this for you. When the market is up like we've been experiencing, we call that a seller's market. This is when there is more buyers or demand than there are available homes for sale. We call this supply or inventory. It's when there are too many buyers chasing too few houses. And in real estate, when there are more buyers than houses, the seller rules the market because for every one seller, there are 10 buyers competing for his house. So he calls the shots. A seller's market is an appreciating market because the price goes up as people fight over deals. This is why we've been seeing multiple offers and homes selling for over asking price. A buyer's market is the opposite. This is when there is more houses, supply or inventory, and not enough demand or buyers. It's when there are too many houses and not enough buyers. And in real estate, when there are more houses for sale than buyers, the buyer rules because for every 10 homes, there is one buyer, so the buyer calls the shots because it's his market. A buyer's market is a depreciating market because the price goes down in order to attract a buyer. That's why when the '08 bubble popped, real estate became a fire sale as sellers dropped the price in desperation to find a buyer. So as a wholesaler and a flipper, how does this impact our business model? What changes do we need to make? Let's do a side-by-side comparison about how we adjust based on the market conditions, and we'll find out how well you've been paying attention. First, let's take acquisitions. Acquisitions is the process to acquire a deal, and this is the same regardless if your strategy is to wholesale it or fix and flip it. So let me ask you, is acquiring a good deal to wholesale or fix and flip easier or harder in a seller's market versus a buyer's market? Now, I hope you answered that it's harder in a seller's market and it's easier in a buyer's market. Think about it. In a seller's market, we have to work really hard to find a good deal because distressed real estate inventory is way down. There aren't as many foreclosures and short sales, and distressed sellers hold out for a higher price. Whereas in a buyer's market, foreclosures and short sales abound, and distressed sellers are much more motivated to sell, making it easier to get deals. In '09 and 2010, I could buy a distressed property any day of the week with minimal effort. Now, selling it was a different story, which we'll get to in a minute, so keep watching, but it's much easier to acquire deals in a buyer's market. Whereas in recent years, as we've been in an appreciating seller's market, I've had to work 10 times harder to acquire good deals. It takes more offers, more marketing, more time and effort. Now let's look at selling. For wholesaling, we call this dispositions. It's the process of finding a cash buyer for your deal. And for fix and flippers, it's selling to a retail buyer. So let me ask you, is selling easier or harder in a seller's market versus a buyer's market? Now, I hope you answered that it's the opposite as acquisitions. It's easier in a seller's market and it's harder in a buyer's market. In a seller's market, since everyone is looking for deals and there aren't as many, buyers pay a premium for properties. As a wholesaler, if you get good at acquisitions, you can make a killing wholesaling because buyers are overpaying. In 2009 and 2010, after the '08 crash, as a wholesaler, cash buyers were following tighter buy criteria. Why? Because it was harder for them to sell, so they needed bigger spreads on the margins. However, in a strong seller's market, cash buyers loosen up their buy criteria and they pay more because it's easier to sell their deals. For example, here in Phoenix, flippers were paying as high as 82% less repairs for deals. Why? Again, because in a seller's market, it's harder to buy, easier to sell, so they cut their margins and overpaid for deals. To recap, in a seller's market, it's hard to buy, easy to sell. In a buyer's market, it's easy to buy and hard to sell. It's just a trade-off. This means if we shift from a seller's market to a buyer's market, you need to adjust accordingly. More on this in a minute, but first, let's go over a few more adjustments based on which market condition we're in. Even though these functions directly affect fix and flippers, they indirectly affect wholesalers since their cash buyers are fix and flippers. Let's consider rehabbing quality. In a seller's market, buyers have much lower expectations on the quality of the rehab. They're happy just to get a house, and they're not overly picky about the quality. So as a fix and flipper in a seller's market, you don't have to go over the top, and if you do, the market will pay a premium. However, in a buyer's market, since your house has to compete with so many others, you better really stand out, and the rehab quality better be over the top, so a buyer chooses your house over the 9 others they just looked at. So what about finding good contractors? In a seller's market, contractors are busy and it takes longer to rehab a house and they charge more. Over the past few years, one of our biggest challenges has been finding reliable contractors that are affordable. The opposite is true in a down market when contractors are dying for work. They lower their prices and then get your job done ahead of schedule. Finally, there's one more I want to discuss, and that is a big one, and that's funding or capital to finance deals. In the seller's market, investment money pours into real estate because confidence is high and risk is low, so lending criteria is looser and rates and fees are lower. However, in a buyer's market, money tightens up because the risk is higher. Lending criteria gets stricter and cost goes up. I remember in 2009 paying 18% and 8 points for hard money. That is insanely expensive compared to single-digit rates in recent years. After having gone through a down market personally, I vowed that when it turned around and money loosened up again, that I would build strong relationships with capital sources so that when the market shifts back, which is inevitable, I'll have funding in place to weather the storm. Capital is very relationship driven. When you prove yourself to lenders, they will be there for you when you need them. Now, I've already sat down with most of my lenders and I've discussed our current projects, and I've reassured them that we'd see our projects to the finish line, and I also wanted their reassurance that they'll continue to fund me on deals. Okay, so what does all of this mean? Understanding how the functions of wholesaling and flipping are different based on the market lets you know where you need to adjust. If it's true that the impending economic recession is going to negatively impact the real estate market, which very likely could happen, even if not for the same reason as the '08 crash, what do you need to do right now to adjust and prepare? Well, let's look back at our chart. In 2020, following the coronavirus pandemic, if the real estate market takes a hit, it may get easier to find deals. Sellers may start to fire sale their properties. 2 weeks ago, we had a property where we offered a private seller $345,000, and he turned our offer down and he was holding out for $365,000. Well, he just called back and said he would take $325,000. This seller literally came down $40,000 overnight. Now, that may be an isolated incident, but in time, we may see an influx in foreclosures as millions lose their jobs, maybe not, especially if people are given hardship money from the government to cover their mortgages. I hope once we get through this and get everyone back to work, that the real estate market bounces back quickly, but even if it doesn't, even if 2020 looks like 2008, as far as the model of buying and selling real estate and people, I plan on wholesaling and flipping same as I've always done. Now, I'll adapt and I'll adjust quickly to operate in a buyer's market, like I explained in this video, but I plan on making a killing in real estate in 2020. In fact, we've increased our efforts. We're making more offers and doing more marketing because now is the time to get in on what we call the coronavirus discount. We're telling sellers we need a bigger discount because of coronavirus. So here's my advice to you. If you've been waiting to get started and you haven't yet made a serious commitment to go for it, if you don't get in the game now, you're going to have serious regrets later because we're going to see some unprecedented deals and opportunities. Yesterday, we had a client in one of my training programs ask for a refund because he lost his job. So let me get this straight. You paid for advanced training to learn how to make money in real estate so that you can quit your job and have more time and work from home. And now you don't have a job and you have more time and you can do real estate from home and you're not jumping all over that opportunity. I thank God every day that I work from home, and for the most part, all of my deals are virtually. I haven't laid off anybody. My entire team works virtually, even my fix and flip deals. So if you feel like now more than ever before is the time to start making money wholesaling and flipping real estate from home in any market, then get my free guide about how to wholesale houses virtually without ever seeing the properties in person. Now I'll put a link to download this free guide in the description below for you. And if you're looking for guidance on how to navigate your wholesaling and flipping business during these turbulent times and how to adjust and adapt, then be sure to keep watching this video series. I'll be releasing several videos about how to specifically adjust your buy criteria and your deal analysis, clauses to include in your offers, how funding is going to change, and how to do deals remotely, even in lockdown. So be on the lookout for those videos. I'll put them all in a playlist, and I'll put the playlist link in the description below. And if you haven't yet, be sure to subscribe to my channel. With hundreds of videos here on the channel and new videos released every single week, this is the #1 channel on YouTube for all things wholesaling and flipping. And finally, be sure to watch this next video all about how to get started wholesaling houses virtually from the comfort of your home. Watch that now, and I'll see you on the next video.